Taking a look at this market today, very choppy day, surprisingly choppy. I thought the bulls would get a stronger move higher. One of our worst trading days in a while since April the 6th. A little over a month ago, we had a day that was in the minus $8,000 level. And April 5th through April 12th had a 17K drawdown. And then April 13th through May 5th had a 65K run up in our 200K portfolio. And we're about the same place on a monthly cycle and drawdown level that we were a month ago. Past performance is not indicative of future results, but we're at about an 18K drawdown. It's lasting a little longer, May 6th through May 17th. And we what's next? We get a run-up cycle. We'll see. The market's been unreasonably choppy. Down $7,400 a day in the 200K portfolio, down $1,250 in the 50K portfolio. And down on the week, minus 1,900 and minus 11,300. Like I said, we are coming off of a pretty big run up, and so we have these are the normal cyclical drawdowns. They are frequent at these levels, and so if you just look at the tape, let's look at the 24-hour tape as well, and you'll see here the market drifted higher. We called this last night. Nice drift higher. Mean revert almost 100% of the move to here, or 100% of the move from here when it started to accelerate. Came all the way back to here. Then it mean reverted 100% of this sell-off cycle. So it ran that. So it ran above these highs. And then really choppy. Then Jay Powell came out and chopped it up some more. And they ran it up to the highs. And they sold it off. And they ran it up to highs. Kind of like yesterday. Extreme chop the last 2 days. And chop comes before the trend typically. We don't know. Could chop some more before it trends though. So sometimes these cycles can last longer. Let's look at the day session. This is the 24-hour session. Keep in mind this is the 24-hour session of the Nasdaq. We know that the VIX is diving, and so while I think the market should is still overvalued, I think we were due for a bull cycle, and sometimes bull cycles are extremely manipulative. Sometimes they start by the liquidity dragging the market up and lots of stop running. So it's not one of my favorite market environments. I thought we were due for maybe a 500 to 1,000 point day on the Nasdaq, and we got this instead. And so to me, that's a little weak if we're due for a big pop. A bear market rally that could potentially turn back into more of a bullish price action. Kind of weak. So we'll see. We'll see if this continues. I do anticipate that they'll try to drive it up higher overnight again, another gap up, and try to take control of this market. The VIX is diving too. So we talked about VIX divergence last week. And the Fed liquidity is still in the market. The Fed keeps talking hawkish, but their action is not hawkish yet. It's very easy money still, even though they keep promising all this quantitative tightening. We haven't seen any real tightening yet other than a 0.5 percentage rate point hike, and so we'll see. Let's go over the trades on the day so you can see all the turning points. So 6 out of 8 of our strategies lost today. You see that we had this tick, we had the gap up and tick pullbacks jumped on. I thought we would be in for a good gap continuation day, but it just hemmed and hauled all day and created a lot of chop, and now we may see a gap up overnight. So EVP1, tried to buy it, tried to sell it, stopped out on both of those. Tick wave, tried to buy it, stopped out. Tick reversal, one of our top strategies, had an equity peak about 4 trades ago, and it had 3 losers in a row and then had a small winner here. So tick reversal also struggled today. Just a really weird patterns in the market. And you see Cobra 2022 captured the move here. Big spike higher, followed by a sharp move lower, followed by another price higher. Continued divergence in wild price action in a narrow range, relatively speaking. Cobra 2022 captured the move overnight. Momentum reversal lost on 2 trades. So this is I thought these were good shorts. I thought there were a lot of good short setups. I thought the market they've decided that they're tired of this bear market and the liquidity wants to drive it higher. We talked about how the VIX was diving and how this is a continuation pattern for just a pretty weak continuation pattern so far. I still do potentially see the opportunity for a bigger bear market bounce, and so could capture that move. And so we're down 1, 2, 3, 4, 5, 6 strategies lost today, and 2 strategies won on the Nasdaq. E-mini S&P, we only had 1 strategy trade. Adaptive moving average caught the last move of the day, really getting beat up right now. It's been one of our top performers, but lately it's been getting beat up just to extreme level of chop. So 0 for 1 in the S&P and 2 for 8 in the Nasdaq. And here's where we are in the drawdown cycle. This portfolio has regular rapid drawdowns to these levels and lots of volatility in this type of market. And we had our worst trading day since April 6th. So it's common to have worst trading days. It's about a month ago. And like I said, during that time period, there was a 17K drawdown followed by a 65K run up through May 5th. And then on May 6th through today, we are in about an 18K drawdown. Question is, will we get a run up cycle? And so we're watching for that. We're trading for that. And what you typically see is chop and then trend and then chop and then trend. Markets have always done that. And knowing the exact time that they're going to chop and trend is pretty difficult to time it. So that's where we are. Good time to consider jumping in or adding to this to potentially catch another nice run-up cycle. And so that's what we are trading for. And those are the trades on the day for May the 17th, 2022.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.